So, President Biden is taking this step today to protect American workers and businesses from unfair trade practices by China. This comes after taxes were looked at again. The decision was made in response to ongoing unfair trade practices such as theft of intellectual property and forced tech transfer, as well as a general economic system that hurts competition in the U.S. economy and others. No fees and no different levels of help. In general, I think there shouldn't be any taxes. I agree that there shouldn't be any tax breaks for electric vehicles either, but only if there are no tax breaks for oil and gas as well. So I think there shouldn't be any taxes or other benefits for oil and petrol or electric cars. China is one of the most important battlegrounds in the global market for electric cars. Tesla is offering incentives that have never been seen before and is working hard against tough competition. We'll talk about how these changes might affect Tesla's market share and stock value. We will also talk in depth about the newest ideas and trends that are affecting Tesla's future and the stock market. Stay tuned as we break down the facts, look at the numbers, and give you information that could change how you decide to put your money. This is an important news that you won't want to miss, whether you're an experienced investor or just interested in electric cars. Please click the like button and subscribe if you haven't already. Then let's find out what could be a game-changing plan for Tesla in one of the most profitable markets in the world. This is news about Tesla stock. Allow us to begin this video. The relationship between the US and China has become very tense because of the rising trade issues that have cast a shadow over world markets. The US recently put a steep 100% tariff on electric cars made in China. This is a big step up in the fight between the two economic powerhouses, and it shows how tense things are getting between them strategically. As a response, China has said it is ready to put a 25% tariff on foreign cars with big engines. This could cause even more problems in the auto industry and affect a number of big players. In spite of these problems, Tesla has not only kept its business going, but also done very well in the Chinese market. The company's strength is clear from the fact that Tesla's Beijing center is breaking records for deliveries. Even though the economy is unclear and trade barriers are in place, this rise in deliveries could mean that people are still very interested in Tesla's innovative electric cars. This great success brings up an important question. Is this the start of Tesla's big comeback in China? Tesla's continued success in China could be a sign of a larger trend of recovery and growth as the company navigates through political storms and takes advantage of its competitive edge. Tesla is always pushing the limits of electric vehicle technology and market reach. In the coming years, its ability to keep and grow its position in China will be very important to its future. In a recent interview, Elon Musk, who is known as the face of Tesla, said that he was surprised by the new taxes that the Biden administration put in place. Musk wanted to get rid of all tax breaks for electric cars, which was similar to what he said about getting rid of similar tax breaks for the oil and gas business. I'm generally in favor of no tariffs, Musk said, and also actually in favor of no tax incentives for EVs, but only if the tax incentives for oil and gas are also eliminated. Not long ago, Tesla's delivery center in Beijing on Crab Island said it had the most packages delivered in a single day. Local news sources say that a film shared on social media showed a number of customers at the center getting ready to pick up their new Tesla cars. Also, Tesla saw more new registrations in China. Between May 13th and May 19th, 13,800 new registrations were recorded, which is 41% more than the previous week. Recent moves Tesla has made in the Chinese market are very interesting and show how the company plans to get a bigger part of this growing market. To get more people to buy from Tesla, the company has come up with a bunch of great deals for people who place their orders before June 20th. The company has offered free supercharging, which is a big plus since there are more and more Tesla charging sites in China. Additionally, Tesla has made it easier for people to buy its cars by offering zero interest rates and no down payments on its famous Model 3 and Model Y cars for orders placed by June 30th. These sales aren't just nice deals, they're smart moves in a very competitive market led by BYD, the world's biggest automotive markets. Tesla needs to use these aggressive marketing strategies if it wants to get deeper into the Chinese market and build brand loyalty. This will set the company up for long-term growth in a very important area. When you look at the bigger picture, the fact that Tesla is a foreign company doing business in China and has strong sales numbers shows that it has a lot of room to grow in the huge Chinese market. In the US, Tesla is getting ready to release its self-driving car called a robotaxi, which will put it directly in competition with Google's Waymo. Now we can have a serious conversation about the rules that apply to self-driving cars. Today we have Steve Wesley, Executive Director of the Wesley Group and former member of the Tesla board, with us to talk about whether regulations will help Tesla's robotaxi. Steve starts off by saying that the talk about self-driving cars is mostly about rules. Waymo has been cautious, starting in a few places and getting regulatory approval before going public. Elon Musk, on the other hand, is pushing for self-driving cars to be used everywhere, even though there have been some problems along the way. This risky plan aims to quickly improve the technology by using data from the real world. Waymo, which is part of Google and is known as one of the Magnificent Seven, has already put driverless cars on the road in places like Phoenix and San Francisco. But in a recent test, Tesla's full self-driving software did better than Waymo's by finishing a drive with no stops and 2 minutes faster than Waymo's because it planned the route better. With updates coming soon to Tesla's FSD software, the company is ready to meet the strict legal standards needed for wide use. Don't bet against Elon Musk, Steve says. The progress made in Tesla's self-driving technology is encouraging, and his track record speaks for itself. In fact, Tesla is putting more emphasis on AI. For example, the company recently posted jobs looking for robots, and autopilot system experts. This shows that Tesla is not only dedicated to being the leader in electric cars, but also to pushing the limits of technology that allows cars to drive themselves. As Tesla continues to make news, some investors are worried about Elon Musk's ability to stay focused, since he is involved with a lot of different businesses, such as his social media platform X. Steve Wesley, a former member of the Tesla board, talked about whether Musk's many interests could hurt Tesla. First, though, I want to say thanks to everyone who has watched this far. Thanks for your support through likes and subscriptions. They really help us make videos and make our channel bigger. Let's get into it more with Steve now. The challenge for any top CEO is maintaining a laser focus, Steve says, and currently, it seems Mr. Musk's attention is spread across too many fronts. He said that Musk was like Jensen Huang, who is seen by many as one of the best CEOs in the world and whose unwavering focus has led to great success. Tesla could benefit from more of this focused approach, he said. It's important to look at Elon Musk's business activities in a bigger picture. Musk is a dynamic leader who runs several big companies at the same time. His impact goes beyond Tesla to include his role at the social media platform X. His active participation on X does more than just keep people interested. It's also a smart way for him to push all of his different business interests. Musk keeps a strong presence on X, which not only engages the platform's users, but also cleverly uses that engagement to make all of his businesses, including Tesla, more visible. The way Musk's work on X and his leadership at Tesla work together is a key part of making Tesla more visible in the market. Musk can successfully bring attention to Tesla's new ideas and innovations by using the power of social media and his own brand. This unified method not only makes Tesla's brand more recognizable, but it can also help the company do better in the market as a whole. Musk's visibility spreads to all of his business ventures as he continues to experiment and connect on platforms like X. This could make Tesla more appealing and successful in the competitive auto industry. Steve Wesley is still positive about Tesla's chances in the US and China. Even though there might be distractions and problems with regulations for self-driving cars, he thinks that Tesla will continue to be successful as long as it keeps upping production, adding more self-driving features, and doing well in international markets like China. As we think about these changes, we should ask, how hard is it for global automakers like Tesla, BMW, and Mercedes to deal with these higher trade barriers? It looks like BYD, Tesla's biggest rival, could be a big problem if these hurdles are taken down. Right now, BYD can't,